Welcome to Second Take, the show that focuses on the issues behind the news. While next year's Investing in African Mining Indaba is looking to showcase junior mining companies active in Africa more aggressively, Exxaro is seeking to reduce its BEE shareholding, and AngloGold has entered an agreement to buy an exploration project in North America. Martin Creamer joins me in studio to discuss these developments. Hi Martin.
Hi Tracy.
What has led to the introduction of the Junior Mining Showcase at the Investing in African Mining Indaba?
Yes, the Investing in African Mining Indaba has got some strong new thrusts, and after their Indaba last year, they put out a lot of questionnaires and they did a lot of research. And coming up from all quarters is the fact that they want more junior miner involvement. Now this has always revolved around the mining giants, and without the mining giants it cannot go on. But even the big majors want access to juniors. The investors want access to juniors. The exhibitors want access to juniors. So it's been a bit of a gap, and they want to fill that vigorously this year.
And what other new thrusts are being planned for next year?
Well, there's also going to be an outreach for the exhibitors. It's called a VIP buyers program, to give those exhibitors more exposure to procurement executives, so that there can be a showcasing of their products, but also interfacing, that can lead to deal flow. So everybody's keen, particularly during this period in mining, which is still tight. The green shoots are appearing, and hopefully a lot of fertilization will get those moving fast. But these particular events can also stimulate additional momentum, and if you really put your heads together, a lot can be added, because you've got so many people coming together there from 3 different directions, 4 different directions, including governments. It's fantastically economically viable. It's cost effective to have them in such close proximity, and you can make so many contacts in such a short time over such a broad area that it is unique. And it's if they can intensify that interface and the networking, it can do a lot more for the mining industry, which is what they're aiming to do.
And then in terms of our major players, Exxaro is busy replacing or looking to introduce its replacement BEE transaction. What does this entail, and why was this brought about?
The black economic empowerment call by the majors and by the corporates has always been once empowered, always empowered. And when you see the complexity of these BEE deals, you realize that for these companies to keep up a momentum of growth, huge pressure is placed on the BEE investors, particularly in a company which is majority black owned. Now, Exxaro, I can remember it when, the main BEE part of it was still called Isizwe. It was down in Anderson Street in Johannesburg. You used to go down there, and players still involved now would be trading coal on the phone. They would be involved in coal mining. The door was open to Isizwe by the mining majors, who wanted not only black empowerment as a sort of a passenger in an aircraft, but real ownership, where you would have this black control of coal mining as a wholly owned company. Then a lot of people wanted Isizwe to join them. Sasol at the time wanted to absorb Isizwe, and there was a unbundling of Eskom, which was state owned, and the decision was to go in. Isizwe would go in with that unbundling. On the one side, you saw the unbundling involved the steel making part of Isco, which went off on its own and became ArcelorMittal. And then the mining assets were put together and further stimulated. And the partnership that they created there, and the company Exxaro, absorbed this Isizwe. And for a long time I could see the strain. If you want to grow, those particular owners had to keep putting more and more money to keep that 50, at one stage it was 55, 56% ownership. To keep it at that level when you're growing, you've got to put a lot of money back in if you are the BEE partnership. And it reaches a point where instead of you getting a smaller part of a bigger cake, you have to try and keep your slice very, very big, and the financing strain is huge. So you can see now, under the new leadership of Exxaro, they are wanting to replace that BEE with a lesser percentage, bring it down to 30%, which is a little bit more manageable and also fits in now with the requirements of the charter. So it's a long story around making sure that you get a workable sort of percentage of black ownership and also allow the company to grow. And I think that that's the sort of area they're trying to arrive at, with a lower percentage of black ownership, but still a very substantial one.
And what are the implications of this transaction?
Well, the implications of it is that it can be easier to grow when you've got the smaller percentage to maintain. If you've got like 56% to maintain, that becomes a financial burden that sometimes you you can't carry it. So you decide, well, I'm not going to do this deal because the dilution aspect is too huge, and unless we can bring in huge additional finances, which might make the whole venture non-viable. So it just points to the difficulty of black economic empowerment. It points to the fact that you can see why the big corporates have longed for this idea of once empowered, always empowered. We know that the Chamber of Mines is going to go into a court case with the government on the 18th around the mining charter. You know, the initial thrust will be to say we want an immediate interim interdict on this, because it's a gazetted arrangement to try and stop it. The second, they will ask the courts for a review of this mining charter. But then in the background, they're also looking for a declaratory order. And that is around once empowered, always empowered. And you can imagine, I've seen some gold companies. We know Harmony Gold had a BEE partner that sold off. The company sold off at the peak and brought in a lot of money to a new company. That particular entity, has bought into big non-mining entities. But is it less empowered? It's even more empowered, because these people are in more control. So, you don't really lose the momentum of BEE ownership when a BEE sells, because they normally go into another area, as we saw this company do. It went into, it bought a soccer team, and it also bought a lot of gold mines, some of them in Zimbabwe. But we know it went into the whole entertainment and leisure scene in a huge way. So has it not benefited the country? Does it have to be specifically in mining? So this whole idea of once empowered, always empowered, it is an aspiration that the corporates are going for, because they feel that you get an even bigger momentum. If people have the freedom to buy and sell and trade, not just sell to other BEEs. They must have the whole market. As we saw with that gold deal earlier, he was able to sell at the peak on the market, and he got himself a lot of money. Okay, he's not in the public space anymore, so we don't actually see day to day what's happening, but we know that the assets he got are still BEE assets, which are doing wonderful things. They've got momentum of their own. He saw fit to move most of the money out of mining, but does that make it less beneficial to South Africa? I don't think so. I think that these BEE companies should have freedom to move around and to invest, to buy in, to sell out, to move into areas, because it's going to help the economy in general, and not just focus specifically on the mining economy.
And another South African mining company in the news is AngloGold. What is driving the company's interest in North America?
Now you see AngloGold Ashanti North America doing this deal with the company that's listed on the Toronto Venture Exchange, and it is a company that does a lot of exploration around North America. particularly in the gold and silver area. And you have an AngloGold Ashanti in South Africa under strain. You know, it's got assets there which some of them are 60 years old, some of them older than the current CEO, you know, that are bleeding. They're bleeding seriously because you have a low gold price in dollar terms, and there's not much benefit from the rand price of gold either, because the rand hasn't fallen to the extent where it can really assist in a great way like it used to. So you have these alarms being sounded saying, you know, we've been running these old assets for more than a year now, and they are running at a loss, and we have to stop that, and we might have to retrench a lot of people. But you can see that when you're in gold mining, every ounce you take out, you must put another ounce in. So they've always got to be looking at junior explorers, what those junior explorers are doing. And in this case, they've done this deal with Rengold in North America. And maybe at the back of their mind, because they're having quite a lot of government strife in South Africa, where you had this almost oblique warning from the Minister of Mineral Resources, Mosbenzi Zwane, that, you know, they better just do this properly and not just retrench 8,500 people very casually, which they would never do. I mean, AngloGold Ashanti would never do that. They'll go all out. It is their last resort. But what do you do when you're running at a huge loss? So you've got to start, and you wonder whether at the back of AngloGold Ashanti's mind they think, well, let's go to less risky frontiers. You know, if we go into a frontier like in North America, it's less risky for us, you know, Nevada. Because you can see they're having a bit of risk in Tanzania. You know, they've had a lot of risk in Ghana. So some people don't like going to the frontier anymore when there's too much risk. And maybe this is a little indication that they haven't got an appetite for going for these very tough frontiers anymore. They'd go for the less risky areas. And you can see them also doing deals with companies that are listed in Australia. Those companies might have exploration in Brazil. They're also looking at that sort of deal. But it also points to another big thing. The lack of exploration in South Africa is a disgrace. You know, there's only near mine exploration. There's no proper greenfield exploration. And the institution to blame is the government. They have done so badly. You can't keep a mining industry going if you can't go into greenfields areas and start building them up. These mines that AngloGold, you know, perhaps will have to put on care and maintenance here, they're aging. A lot of them are depleted. So if you hit by a low gold price, you know, you're in serious trouble. Whereas you've still got that obligation to make sure you grow. But where you grow now might become more concentrated, and it might concentrate the mind more. And that's of great regret to South Africans, you know, to think that we're just not getting that exploration going, and therefore there's a lack of opportunity. Even if the government was doing a great job, you know, there's still a situation where there's no exploration opportunity. There are no juniors offering you anything. Whereas Canada has got it right. I mean, if that's one country that's got it right in exploration, it's Canada. You know, it's got that fantastic flow-through scheme where, you know, when you go to Toronto, you find even the taxi driver that's driving you around, he's got an interest in an exploration company. He's bought shares in an exploration company because he knows he can get the tax benefit, you know, from that. So that the money that these explorers spend can be written off by little shareholders all over the place as a tax benefit. And it's worked. And when you get to Toronto and you see those high skyrise buildings, that's all around that flow-through scheme, which for some reason or other we don't want to introduce into South Africa. And there I point at the Treasury in particular. They have been so myopic that, you know, it's just bad for this country. They have said, no, we will have a better we'll have a scheme that's better than flow-through. We can see they are talking absolute nonsense. You know, they really are not putting South Africa's interests first. And what annoys me is you see little boutiques in Cape Town now benefiting from what should have been a benefit for mining. And these little Cape Town guys have got it, you know, as a way of investing and a special incentive they get. That was not what it was intended for. And when you bring these treasury people and you say to them, look, this is reality, they become stubborn because they don't put South Africa first for some reason. And I think that should also look at that flow-through scheme, which we need in South Africa. It's worked elsewhere. So why do you come with your pussyfooting and say you got something better when you know it's not? And in fact, it hasn't even worked. The mining companies have not gone for it because it's parsimonious in the extreme. And to put that into plain English, it's stingy. It gives the mining industry nothing. And you know, the Australians are looking at flow-through, other people, because it's worked. Maybe you've got slight tweaking to do, but we've got a serious situation here because without exploration, this mining industry will eventually grind to a halt.
And coming back to the exploration project in Nevada, what does the agreement between Randgold and AngloGold Ashanti entail, and what makes the project so attractive?
And you see the way they do it. You know, they're innovative in the way they do a deal. You don't have to pay the $3 million right away. You know, you stagger those payments. And you can withdraw. So, you know, in the first year, there's a part of that $3 million payment. The next anniversary, if you think, well, you know, this prospect is living up to what we thought it had, because there's always a risk, you know, with the exploration, it's high risk. You can drill a hole thinking that you're going to find gold and silver, but it may not be there. So, you know, they've got several years staggered now before they pay what is not a price that is going to unsettle anything in their business. But they've got that company, Randgold, doing the hard yards. And then they are buying in at greater and greater levels until they own 100% of that if everything works out. So, you know, they're diminishing the risk. We don't see this sort of deal making in South Africa. We should follow, you know, the sophistication of the other mining jurisdictions, because at the moment we're so low down on the investors list that I don't think we even rating as alternative investment destinations anymore. We're just off the map.
Thanks, Martin.
It's a great pleasure, Tracy.
That's it for today. Join us again next week for more news analysis on the South African mining industry.